What if SoFi, that little-known NASDAQ stock, held the key to your next big financial move? You see, it's been making some serious waves in the finance world, and you don't want to miss out on this. You're probably familiar with SoFi Technologies as the student loan refinance company, right? Well, hold on to your hats because there's more to the story. Recently, there's been a resurgence of interest in SoFi, not just because of student loans. The resumption of student loan repayments is just the tip of the iceberg. SoFi is evolving, and it's happening fast. Today, we're going to unravel why SoFi might just be the next big thing on Wall Street. We're talking about rapid growth in retail banking, a bold expansion into investment banking, and some seriously impressive financial performance. So, get ready to dive into finance with us as we explore why SoFi could be a game changer for you and your investments. SoFi is a company you might not have heard much about, but it's been making significant moves in the finance world. You see, their main gig used to be refinancing student loans. In fact, they were pretty good at it, and their market share for this business climbed to an impressive 60%. But here's where it gets interesting. SoFi didn't stop there. They've transformed themselves into more than just a student loan refinance platform. Now, they've become what we call a fintech giant, a financial technology powerhouse. They're not just about helping people with student loans anymore. They're about redefining the way we think about finance. Now, let's talk about SoFi stock and how it experienced a roller coaster ride in 2023. Its value went from a peak of $12.35 on January 3rd to a low of $7.01 on August 15th. The stock's volatility is attributed to various factors. One major factor is the legal battle with the Department of Education over the student loan repayment pause. If SoFi wins this lawsuit, it could lead to a substantial boost in the stock price. On the positive side, SoFi is making strides in its financial performance. While it's not yet profitable, its revenue has surged by 58% in Q2 2023. Moreover, SoFi has expanded its product offerings, like its new cash-back rewards credit card. This growth potential has caught the attention of analysts, with some firms upgrading their ratings and setting higher price targets, indicating optimism about the stock's future. Another noteworthy move by SoFi has been its venture into retail banking, and they've been on quite the journey. In less than 2 years, they've managed to attract nearly 2.7 million customers to their platform. Now, let's put that into perspective. Traditional banks, the big ones, might have tens of millions of customers. But here's the thing, SoFi's customer base is growing at a double-digit rate, indicating a trajectory that could lead them to join the big league with an 8-digit banking client base of their own. You might be wondering why this matters to you. Well, imagine having a bank that's as ubiquitous and accessible as the big names, but with a fresh approach tailored to you. That's where SoFi is headed, and it could mean a whole new level of convenience and services for you. In addition to its strides in retail banking, SoFi is expanding its reach into the world of investment banking, and this move is something you might want to pay attention to. They're not just focusing on the big shots, but aiming to provide tailored financial services to young, well-off customers like you. But SoFi has stepped into the IPO underwriting arena, where companies go public, like the upcoming Instacart IPO. While they might not be the lead underwriter, it's still a significant step. Why does this matter? Well, it means they're giving regular folks like you the chance to get in on IPO shares, a privilege often reserved for the bigwigs. And if SoFi can succeed in democratizing IPOs, it could turn into a major revenue stream. So, you see, it's not just about investing, it's about changing the way you invest and giving you access to opportunities that were once out of reach. Now, let's take a look at the financial side of SoFi. It's not just about innovation, it's about making money, and SoFi is doing just that. They're on track to hit something called GAAP profitability by the next quarter. That's the kind of profitability that matters in the financial world. But the numbers point to some serious growth. By the year 2025, they're projecting annual earnings to hit a solid 25 cents per share. Now, that might not sound like much, but in the world of finance, it's a significant figure. SoFi isn't just a flash in the pan, they're on a path to sustained growth that could mean big things for you and your investments. Analysts are also keeping a close eye on SoFi stock, and their opinions matter when you're making investment decisions. Right now, the consensus rating for SoFi is a hold. In simpler terms, analysts suggest that you might want to keep an eye on it, but it's not necessarily a strong buy or sell at this moment. Here's where it gets interesting, though. The average price target for SoFi is around $10.32 per share, which is notably higher than its current market price. So, if things go as analysts predict, there's a potential upside waiting for you. What's been driving the recent stock price increase? Well, it combines factors, including SoFi's impressive financial performance, its growing customer base, and the broader market's recognition of its potential. SoFi is showing some promising signs, which you might want to consider when looking at your investment portfolio. But before we continue, we want to thank you for watching this far. What's more, SoFi is not just a one-trick pony. They have a diverse range of financial products, and that's good news for you as an investor. See, this diversity opens up the doors for cross-selling opportunities. That means they can offer you a whole suite of financial services, from loans to investments, all in one place. It's like having a financial supermarket at your fingertips. But here's the secret sauce: SoFi's banking arm is playing a crucial role. It's where they get low-cost funds, which is a fancy way of saying they're not shelling out big bucks to fund their operations. This, in turn, helps them increase their net interest margins. In plain English, it means they're making more money from the interest on loans than they're paying on deposits. So, while they offer you a range of financial goodies, they're also making sure their own financial house is in order. So again, SoFi is capturing the attention of investors for some solid reasons. First off, they're showing positive adjusted EBITDA, which is a fancy way of saying they're making good profits after considering various expenses. That's something that's music to an investor's ears. But it doesn't stop there. SoFi is on a revenue growth spree, and it's not slowing down anytime soon. What really seals the deal is the potential for GAAP profitability. They aim to turn a profit in a way that counts in the financial world by the next quarter. That's not just a sign of a healthy company, it's a potential game changer. And if they keep this up, their stock could see a valuation re-rating. In plain terms, it means the market might start seeing SoFi in a new light, and that's when your investment can shine. SoFi is not just riding a wave, it's setting its course in the fintech space. And if you're considering where to put your money, SoFi is making a strong case for itself. So, are you interested in investing in SoFi for the long term? Join the conversation in the comments below. And while you're at it, make sure to smash the like and subscribe buttons down below. Additionally, if you want to know more about SoFi Stock and another rising tech company, I highly recommend watching this amazing video. Simply click this video right here. Thank you for tuning in and stay tuned for more exciting content in the future.